Welcome back to the Forex and Crypto Trading Masterclass. If this is your first time here, do hit that subscribe button and turn on the notifications. You don't want to miss what's coming next. We're wrapping up the basic Forex and crypto education section today. We've covered asset classes and types, exchanges, brokers and prop firms, and types of analysis. And now we are finishing strong with types of traders and investors. This is one of the most important videos in this entire foundation module. And why? Because choosing the wrong trading style is one of the fastest ways to fail as a trader. But choosing the right one, that's when everything clicks. So let's dive in and find your trading style. In this video, I'm breaking down the 4 main trading styles you need to know. We'll cover scalping for those who want fast-paced action, day trading for those who want active trading without overnight risk, swing trading for those who have full-time jobs or busy schedules, and position trading or investing for those building long-term wealth. By the end of this video, you know exactly which style fits your personality, your lifestyle, and your goals. This isn't about what's popular or what some influencer is hyping up. This is about what works for you. So let's get started. Before we dive into the styles, let me tell you why this matters so much. Your trading style determines everything about your trading career. It determines how much time you need to dedicate every single day. If you pick a style that requires 8 hours of screen time, but you only have 1 hour, you're setting yourself up for failure. It determines your risk and reward. Some styles target small, quick profits. Others target massive gains over weeks or months. It affects your stress levels. Some styles are intense and fast-paced. Others are calm and patient. If you're a naturally anxious person and you choose scalping, you're going to burn out fast. And most importantly, it dictates which strategies will actually work for you. A scalping strategy won't work for a swing trader. A swing trading strategy won't work for a scalper. It needs to match your style with your strategy. Now here's the brutal truth. You pick the wrong trading style and you will get frustrated. You feel like trading doesn't work. You blame the markets. You blame your strategy. You blame everything else except the real problem, which is you're trading the wrong way for who you are. But if you pick the right style, the one that fits your lifestyle, your personality, your schedule, that's when sustainable success becomes possible. That's when trading stops feeling like constant struggle and starts feeling natural. So let's find your style. There are 4 main trading styles and each one is completely different. First, we have the scalper. This trader holds positions for seconds to minutes, lightning fast in and out. Second, the day trader holds trade for minutes to hours but never holds overnight. Everything closes before the day's end. Third, the swing trader holds trades for days to weeks, captures the bigger price swings. And fourth, the position trader or investor. He holds trades for weeks, months, or even years. This is long-term wealth building. Now let's break down each one so you can see which one resonates with you. Let's start with scalping. This is the fastest, most intense style of trading. Scalpers hold trades for seconds to minutes. Literally, blink and your trade is done. They are making 10 or more trades per day, sometimes 50, sometimes 100. It depends on how active the market is. They use very low time frames, 1 minute, 5-minute charts, maybe 1 hour at the highest. The goal here is simple, quick, frequent profits from small price movements. They are not trying to catch the entire trend. They are trying to scalp 5 pips, 10 pips, 15 pips at a time, over and over again. Imagine sitting in front of your screen, eyes glued to the charts, entering and exiting trades every few minutes. That's scalping. It's fast, it's intense, and it's not for everyone. So what are the pros of scalping? First, there are many opportunities daily. The market is constantly moving, so scalpers always have something to trade. You're never sitting around waiting. Second, you get quick results. You know if you're right or wrong within seconds or minutes. There's no waiting days or weeks to see if your trade works out. It's immediate feedback. And third, there's no overnight risk. You close everything before the day ends, so you're not worrying about what happens while you're asleep. No gaps, no unexpected news while the market is closed. But here's the reality. Scalping has serious downsides. First, it is extremely time intensive. You're glued to your screen for hours. If you have a job, kids, responsibilities, scalping is going to be very difficult. Second, it's a high stress and causes mental fatigue. Your brain is making rapid fire decisions all day long. By the end of the session, you're exhausted. This is not a relaxing way to trade. Third, it requires fast execution and decision making. You can't hesitate. You can't second guess. You see the setup, you take it, you manage it, your route. If you're slow or indecisive, scalping will destroy you. And finally, the trading cost adds up. Every time you enter and exit, you pay the spread or commission. When you're taking 50 trades a day, those costs can eat into your profits significantly. So ask yourself, do I have the time, the mental stamina, and the personality for this? If not, scalping is not your style, and that's perfectly okay. Next, we have day trading. This is one of the most popular styles, and for good reason. Day traders hold positions for minutes to hours, but they always close before the day's end. No overnight risk. Everything is done and settled by the time you go to bed. Day traders typically take 1 to 5 trades per day, not 50 like scalpers, just a handful of high quality setups. They use time frames like 5 minutes, 15 minutes, and daily charts to find entries and manage trades. The goal is to capture intraday price movements, those swings that happen within a single trading session. You're not trying to catch tiny 5-pip moves like a scalper, but you're also not holding for weeks like a swing trader. You're right in the middle. This is a very active style, but it's manageable. You're engaged with the market, but you're not overwhelmed. So what are the pros of day trading? First, no overnight risk. You sleep peacefully knowing you have no open positions, no worrying about what happens in the Asian session or if there's breaking news overnight. Second, there are multiple opportunities daily. You're not waiting around for days for a setup. The market gives you chances every single day. Third, it's active but not overwhelming. Unlike scalping, you're not taking 50 trades. You're taking a few high-quality setups, managing them carefully, and closing them before the day's end. And finally, it's a good balance of time and reward. You're putting in 2 to 5 hours of focused work, and you're getting paid for it. It's sustainable. But day trading isn't perfect. First, it requires daily screen time. You need to dedicate 2 to 5 hours every day to watch the charts, find setups, and manage trades. If you can't commit to that, day trading won't work. Second, it needs to be available during trading sections. The best opportunities happen during London Open, New York Open, and session overlaps. If you're working a 9-to-5 job during those hours, you missed most of the action. Third, it can be stressful during volatile markets. When the market is whipping around, your heart rate goes up. You need to stay calm and disciplined, even when things get chaotic. And finally, you need strong discipline to close trades daily. It's tempting to hold a trade overnight if it's slightly negative, thinking it will come back. But day traders don't do that. You close everything, win or lose, before the day's end. That takes discipline. If you can handle these challenges, day trading might be your go-to style. Now let's talk about swing trading. This is my personal favorite, and it's the style I recommend for most people, especially if you have a job or other responsibilities. Swing traders hold positions for days to weeks. They're not watching charts every hour. They check in once or twice a day, manage their trades, and go about their lives. They take 1 to 5 trades per week, not per day, per week. They use higher time frames like the 1 hour, 4 hour, and daily charts. The goal is to capture larger price swings over multiple days instead of grabbing 20 pips like a day trader. Swing trades are targeting 100 pips, 200 pips, or even more. This is a patient strategic style. It's perfect for people who want to trade seriously but don't have 5 hours a day to stare at the charts. The pros of swing trading are massive. First, you need very little screen time. Check your charts once in the morning, once in the evening. That's it. You can work a full-time job and still swing trade effectively. Second, it's lower stress and more patience-based. You're not making split-second decisions. You have time to think, analyze, and plan your trades carefully. Third, there is bigger profit potential per trade. Because you're holding for days or weeks, you're capturing much larger moves. One good swing trade can make you more than 10-day trades. And finally, it fits people with jobs or busy schedules. If you're working 9 to 5, raising kids, running the business, swing trading is perfect. You're not sacrificing your life to trade. But swing trading has its downsides. First, there is overnight risk and weekend risk. The market can gap against you. News can come out while you're asleep. You need to be okay with that uncertainty. Second, there are fewer trading opportunities. You're not getting setups every day. Sometimes you wait a week or two for perfect entry. That requires patience. Third, trades take days or weeks to play out. If you're the type of person who needs instant gratification, swing trading will drive you crazy. You place a trade on Monday and it might not hit your target until the following week. And finally, there's an emotional challenge holding through pullbacks. Your trade goes into profit, then pulls back, then goes into profit again. You have to resist the urge to close it early out of fear. If you can handle these challenges, swing trading is an incredible style. Finally, we have position trading and investing. This is the longest term style. Position traders hold for weeks, months, or even years. They are not trading, they are investing with a trading mindset. They take 1 to 3 trades per month, sometimes even less. They use very high time frames, the 4-hour time frame, daily and weekly charts. The goal is a long-term wealth building, and it's heavily fundamentally driven. This is for people who want to build wealth passively. They are not trying to make quick money. They are thinking in years, not days. The pros of position trading are clear. First, it requires minimal screen time. This is the most passive approach. You check your positions once a week, maybe once a month. That's it. Second, it's the lowest stress of all trading styles. You're not worried about daily fluctuations. You're thinking long term. Third, there's a massive profit potential long term. One good position trade held for a year can change your financial life. And finally, it's ideal for investors building wealth. If you want to grow your money over time without the stress of active trading, this is the way. But position trading has its challenges as well. First, it requires large capital to make meaningful returns. If you only have $500, making 20% in a year is just $100. You need significant capital for this style to be worthwhile. Second, there are very few trading opportunities. You might only take 5 or 10 trades in an entire year. Third, trades can take months or years to play out. You need extreme patience. Most people can't handle it. And finally, you must endure large drawdowns without panic. Your trade might be down 15% for 3 months before it turns around and goes up 50%. Can you handle that emotionally? Most people can't. If you're building long-term wealth and you have the capital and patience, position trading is very powerful. So, which style is right for you? Let me help you figure it out. Ask yourself, how much time can I realistically dedicate to trading every single day? If you have 4 to 8 hours, scalping might work for you, but be honest, do you really have that much time every day? If you have 2 to 5 hours, day trading is a great fit. This is active trading, but it's manageable. If you have only 30 minutes to 1 hour, swing trading is perfect. You check the charts, manage trades, and go about your day. And if you have 10 to 30 minutes, position trading is still your style. Passive, long-term, minimal effort. Now ask yourself, am I oriented and fast-paced? What's my personality? Do I love adrenaline and quick decisions? Then scalping or day trading might suit you. Or are you patient and laid back? Do you prefer to think things through carefully? Then swing trading or position trading is a better fit. Be honest with yourself. Don't try to force yourself into a style that doesn't match who you are. Now let me tell you what we will focus on in this course. Our primary focus is day trading and swing trading. Why? Because these two styles offer the best balance of time and opportunity. They are suitable for beginners and professionals alike. The strategies you learn scale well to prop firms and they fit most lifestyles, even if you have a full-time job. Here's the beautiful part. Everything you learn in this course can be adopted to any style. The market structure principles, the liquidity concepts, the supply and demand zones, they all work on any time frames. So even if you start as a day trader and later decide to become a swing trader, you're not starting over. You are adjusting your time frame. You can adapt what you learn here to fit your life. That's the power of foundational education. And here's something important. Yes, you can absolutely switch styles. Many traders start with one style and evolve over time. A common progression looks like this. You start with day trading to learn the markets, understand how price moves and build your skills. And as you get more experience and busier with life, you move to swing trading because it requires less screen time. And eventually, some traders do both. They day trade during high volatility sessions and swing trade the rest of the time. You're not locked into one style forever. Experiment, find what works, adjust as life changes. The key basically is to commit to one style long enough to actually master it before switching. Don't jump around every week. Give yourself time. Before we wrap up, let me warn you about the common mistakes traders make when choosing a style. Mistake number 1. choosing a style based on hype. You see someone on YouTube saying, I made $5,000 scalping today, and you think, that's what I need to do. No, that's their style. It might not be yours. Don't let hype dictate your decision. Mistake number 2, forcing yourself into a style that doesn't fit your life. If you work 9 to 5 and you try to scalp during your lunch break, you're going to fail. Be realistic about your time and energy. Mistake number 3, switching styles every week. 1 week you're scalping, next week you're swing trading, the week after you're day trading. You never stick with anything long enough to see results. This is called lack of consistency, and it's a killer. Here's what you should do. Start with one style, master it, give it at least 3 to 6 months of focused effort. If it's truly not working after that, then adapt, but don't give up after 2 weeks. Alright, here is your assignment for this video, and I want you to take this seriously. Reflect on your lifestyle and your goals. Grab a pen and paper or open note apps and answer these 4 questions. Question 1. How much time can I realistically dedicate to trading every single day? Not how much time you wish you had. How much do you actually have? Question 2. Am I patient, or do I prefer quick action? Be honest. Do you get bored easily, or can you wait days or weeks for a trade to play out? Question 3. Can I handle overnight risk, or do I need to close trades daily? Does the idea of holding a trade overnight stress you out, or are you okay with it? Question 4. What's my income goal? Per trade or per month? Are you trying to make $100 per trade or $1,000 per month? Your goals will determine which style makes sense. Write down which trading style suits you best and explain why. Don't just pick one style randomly. Think it through. This decision matters. And if you want, drop your answer in the comments below. Tell me which style you're choosing and why. I read every comment and I'll personally respond. Alright, congratulations. You've just completed the basic Forex and crypto education section. You now understand what you're trading, where to trade it, how to analyze the markets, and which trading style fits you best. This is a huge foundation. In the next video, we're moving into understanding candlesticks. This is where we start reading price action like a professional trader. You learn how to see what the market is telling you just by looking at candles. It's powerful stuff. If you found this video helpful, do smash that like button, subscribe if you haven't already. We have so much more coming in this masterclass, and drop a comment telling me which trading style you chose. I want to hear from you. Thank you for being here. Honestly, thank you for investing in yourself and taking this journey seriously. I'm proud of you. Now let's keep building your trading future together. See you in the next video.